Welcome to this explainer. Look, if you're a focused learner trying to track down complex market setups without all the fluff and external noise, you're in the exact right place today. We've got a highly compelling setup on our radar that we absolutely need to unpack. We're looking at the long-term price chart of Nkarta Inc., trading under the ticker symbol NKTX. We're mapping out what I like to call the risk-to-reward roadmap. And I gotta tell you, the energy around this stock right now is building fast, mainly because a major potential price recovery is starting to take shape. There's a whole lot to cover here, and the technical levels are just fascinating. Okay, let's dive right into this. One of our sources hit the nail on the head with this quote: "Volatility in these kind of stocks are extremely high. You must know your entry and exit." That literally sets the stage for everything we're going to talk about today. Because yes, the recovery on the NKTX chart looks incredibly promising right now, but we can't ignore market reality. The stakes with this specific stock are high, really high. We're talking about setups that can give you drastic, rapid swings in both directions. You can't just blindly jump in hoping for the best. You need a precise, calculated strategy. You got to know exactly where you're getting in and, honestly, more importantly, exactly where you're bailing out if things go south. So what is the actual setup here? The core narrative with NKTX is a major attempted price recovery, and it's happening right on the heels of a massive, steep correction. It got heavily beaten down. But here is exactly why it's catching so much attention. Based on the long-term price action, this stock has positioned itself almost perfectly for a potential upward move. It's finally stabilized after that huge drop and is actively trying to push higher. You can see the momentum visibly shifting. But, as with all great chart setups, having a long runway to the upside means absolutely nothing if your foundation isn't completely solid. Now, what's really interesting here is the stark contrast between our two critical lines in the sand. On one side, we've got our current support level sitting at exactly $3.24. On the flip side, we have a strict stop-loss level at $2.86, with maybe some ultimate leeway down near the $2 mark. I really need you to mentally highlight these numbers because this right here, this is your absolute floor. Currently, the stock is trading at or above these levels, which is exactly what we want to see. But make no mistake, this is also the danger zone. You have to watch this floor like a hawk, because if the stock falls below both of these levels, the downside momentum is probably going to resume, and this entire bullish setup gets completely invalidated. But what happens if that support floor actually holds? Let's walk up this conditional if-then ladder together. Step 1 is simple, but non-negotiable. Hold above that $3.24 support. If NKTX can sustain itself above $3.24 and that $2.86 stop loss, then step 2 is officially triggered. That immediate target is currently sitting around $5.44 or $5.45. Hitting that target proves the initial recovery is actually real. But step 3, well, that's where things start to get really exciting. If momentum carries it past that mid-$5 range, this stock has the potential to stretch all the way up to its 2024 high of $16. Do you see how these targets just logically build on one another? It's a step-by-step climb purely dictated by price action. Reaching that $16 mark is fantastic, no doubt about it, but listen to what happens next. Surpassing the $16 mark changes the game entirely for NKTX. I want to build a little anticipation here because crossing $16 isn't just another rung on that ladder we just talked about. Going beyond that previous high represents a whole different situation because it requires a true breakout. If the stock can surpass and, this is the key word here, sustain itself above $16, the door is kicked wide open. That is the exact moment the true exponential upside of this entire price recovery gets unlocked. And the sheer scale of these targets brilliantly illustrates just how big this could get. Once you're past that crucial $16 mark, a whole new trajectory opens up. Target 1 is your very first major breakout goal, sitting at $20.34. If it clears that level, we aggressively move to target 2, aiming for $41.50. And in the crazy event that the stock completely shatters that $41 or $42 range, an ultimate extension target becomes active at a staggering $79 or $80. The math on this potential move is just incredible when you break it down step by step like this. I want to just pause right here and let this number sink in for a second. $80. Think about where we started this conversation. We were talking about mandatory support levels hovering down around $3. This $80 mark is the ultimate extension target. It is the absolute top of the mountain for this specific setup. This represents the massive reward potential that's out there, but only if the momentum holds, only if the initial breakouts actually happen, and only if the overall price action works out perfectly over time. It's the grand prize. So the crucial point we keep coming back to is this one overarching concept: sustainability. This means trading and holding at or above key support levels to prevent downside momentum, because all of those towering targets we just hyped up, the 20, the 40, the 80, they're completely irrelevant if the stock cannot sustain its price about the important support levels first. Without sustainability at the floor, the downside resumes. It is the golden rule of this entire technical trade setup. You literally cannot look at the ceiling if you are actively falling through the floor. Let's pull this all together and summarize exactly what this requires from you, the focused learner navigating this setup. First, remember it is absolutely mandatory that NKTX holds above $3.24 and $2.86. Second, you must recognize that falling below those levels triggers immediate downside risk. You just cannot afford to be complacent here. And third, discipline is heavily required to trade this setup. You are the one who has to manage your entry and your exit. The prospects going forward look incredibly good, for sure, but strict adherence to those support lines is exactly what separates a calculated strategic risk from just rolling the dice at a casino. Which leaves us with this final, thought-provoking question to end on. Does the extraordinary upside potential of $80 outweigh the strict discipline required to honor a $2.86 stop loss? Think about your own trading psychology and your own discipline for a minute. Are you truly prepared to walk away and cut your losses if that floor breaks, in exchange for the chance to ride that conditional ladder all the way to the top of the mountain? It is the ultimate risk-to-reward scenario to analyze. Thank you so much for joining me on this explainer. Until next time, keep analyzing, stay focused on those support levels, and keep learning.